Hey everyone, it's Mike from Orderflows, and in this video what I'm going to talk about is sort of the different types of order flow footprint charts that you can look at as a trader. And most of us, we use the regular bid-ask footprint, which means you're comparing the volume traded on the bid and the offer. Right? The bid-ask footprint shows you the volume traded on the bid as well as the volume traded on the offer. Then you can look at it in the two-way auction. So for example, 105.40, 24 contracts traded on the bid, 11 contracts traded on the offer. Then you would compare it, what was traded on the offer versus what was traded on the bid at 105.39.5. You can see 19 versus 11, 24 against 28, 31 against 22, because you'd be looking at the bid-ask relationship. However, there are different types of footprint charts you could look at. You could look at the delta, which is the horizontal delta at price, meaning, at 105.41, you'd see 5 traded on the bid, 22 traded on the offer. So that would give you 17 more lots traded on the offer. So you'd have a positive delta of 17. Okay, because it was traded on the offer, means you had that aggressive buying, meaning it was positive delta. Whereas here at the next price, 105.40.5, it was 31 traded on the bid, 28 traded on the offer, means that you'd have negative delta of 3 at this price. Now you also have the volume footprint, which is the total volume at price, right? So obviously this would be 2, 20, 35. So you also have a diagonal delta, okay, which would be comparing the delta in the two-way auction. Okay, so there are different uses for these. The ones that I tend to focus on the most is the bid-ask as well as the delta, right, the horizontal delta. But I just go through them and show you what they look like, right? So this is our normal bid-ask footprint, which majority of traders use. However, most order flow software, this is my Orderflows Trader 6 software. Other softwares, they should have it in some form. If they don't, you really want to go take a look at other platforms. So again, bid-ask, delta, volume, diagonal delta. Okay, so for example, the volume, how does it look, right? It's just going to show you the total volume traded at that particular price. It's just going to put it on one side of the chart. You can't put it on both sides. You wouldn't want to. But you can see here, right, this is the total volume traded at price. Now, there are ways to use this. You're going to look for concentrations of heavy volume at certain areas in a bar. But again, maybe that'll be a different video because that can be a quite in-depth topic. Let's take a look at some of the other footprints, how they look, so you get an idea. So let's go in here to the settings. It's under ladder contents. Where are we here? Volume. Diagonal delta. Again, this is the delta in the two-way auction. Okay, you can see here, this is how it looks. All right, you'll see, like, even though the bar goes down another price, this is generally the reason why the bar is still showing that wick, even though there's no delta there, is because it was 0 delta. But the other chart I like to look at, in addition to the bid-ask footprint, is the delta footprint, right? Delta at price. People say, well, why do you use delta at price and not the diagonal delta? Well, it's because I'm analyzing, where the trading was taking place. Was it taking place on the bid or the offer? At that price, that's what I'm interested in. I've spent a lot of time with delta footprints over the years. It's a secondary chart that I look at after the bid-ask footprint. So you can see here, right, you get a nice clean picture of, in my opinion, it gives you a better idea of where absorption is appearing than the diagonal delta chart. And this is Euro currency, but on thinner markets that don't trade a lot of volume, relative to, say, the E-minis, it's kind of nuanced, right? You have to spend a lot of time understanding what heavier delta is going to look like in a bar, okay, to get a good idea. There's certain things that I like to see, when a market is moving up or moving down in the delta footprint, right? I like to see, obviously, all the bids getting hit on a red candle, right? That's just telling me strong aggressive selling in the bar, obviously. Just as if a bar is rising up, I like to see bids also coming in near the top of these bars. It's telling me the market is getting bid up. I don't want to just see aggressive buying, yeah, I mean, that's what you expect to see. But when I sort of see things that aren't really visible to the naked eye, like here, right, this market had this nice little pop up, right? Yeah, you expect to see positive deltas in these bars. But when I see, a market sort of come in, make a little bit of a low here, swing low, and then start to trade higher, then I'm seeing some nice bids coming in to absorb whatever aggressive selling is taking place. Then that gives me an idea that, hey, you know what, someone is bidding up this market as opposed to just aggressive buyers coming in and taking the market higher, right? Because for a market to go higher, yes, you do need those aggressive buyers to come in, but what you also need is some nice passive buyers, right? People bidding the market, not just people lifting the offer, but people supporting the market with their bids to take it higher. Now let's just change gears really quick here. Let's go to an E-mini chart today and take a look at the delta footprint, right? Delta footprint, again, gives you an insight into the market that you probably wouldn't have just, looking at a normal bid-ask footprint unless you're really, I'll say really experienced, but more experienced with looking at the volume footprint, or I don't want to say volume footprint, but the bid-ask footprint. And really what it's going to give you sort of insights into, like I said, where absorption is taking place in the market. So let's just go back, sort of earlier today, around the cash open, to sort of take you through it, right? So cash open here, right? And, we popped up, we started trading down, down, down. Then we get this nice green bar up, and then the market sort of reversed and started going higher. Well, what's in this bar that can tell me that, hey, you know what? There is some support coming into this market, right? Well, the market starts selling off right here in this bar right after the cash open. Then it hits this pocket in here with some nice bids resting in the market, right? Everyone talks about, oh, you got to use a book map so you can see where the resting liquidity is. Well, I can see that in a footprint, right? Because I know what to look for. And that's why I do these videos, to sort of teach you what you look for. I know some people will say in the comments, oh, this doesn't matter because it's not showing anything in live trades. Well, the whole point of learning, right? You go to medical school and you learn how to operate, right? And that's what this is doing. It's like teaching you what to look for, right? So if you're looking at a delta footprint chart and you see the market sort of shoot down, right? This is a nice bar down, 39.55 and a quarter down to 47 and a quarter, nice 7.8 point move down in a minute. But then it runs into this area where there's some passive buyers to absorb that selling, right? Then you see the aggressive buyers come in, right? And you're seeing the buying imbalances on the way back up, right? Even this bar here sort of seeing the same thing, right? We're running into some support in here, some support in here, and the market keeps going up. Now, where it got really interesting a little bit later, here, this area, around 9:15 to sort of this 9:30 before it started, had this little pop up here, was this area in here. You can see, look at this. You can sort of start to see every time it would sort of come down a little bit, but really the interesting part was when you get down to this 57 area. Let me just draw a line here, right? Well, obviously this is 54 and a half, but every time these bars push down into this area, you could see the negative delta, 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 the negative. It's just like there was some decent bids in here, right? You could just see it. Every time it would come in, these bids would absorb that selling, market would trade back up. Come back in, absorb that selling, market trade back up. Now here, this was interesting because you had a big offer up in here. The delta was 790, so there was some resistance in here. So, okay, I know I've got resistance coming in here at 62. So let me just draw a line here, okay? And I know I have support down here. Every time we come in here, it's just sort of hanging around and then rallies up. So I know I've got this area. Okay, now keep this in mind. This is the area you're looking to buy in, 57 down to 54 and a half, call it 56. Your stop's just below this area here at 54. If you're buying it in here, your first target, you're buying it at 56 up to 62, that's 6 points. But I know that I have this resistance here. If I can get past this, it can shoot up even further. So imagine, you're looking to buy around the 56 area. First target, 62. Second target, call it 66 up in here, or 66, or I don't want to say, oh, you'd call it up here at 70. See, you came up there. No, this is your first target. Another target, is 10 points from your entry, and you're buying it at 56, a stop at 54. You're risking 2 points. Okay, you get plenty of opportunity in here, right? Because you've hit this resistance area. You're coming back in support. You just buy it in here, in this area, not just anywhere. You buy it in this area with a target up here, because that if we get past this resistance, it can keep going. Doesn't mean it's going to keep going the rest of the day up, but at least it can get past, clear out that resistance. It should go higher. So again, you're risking 2 points for 6 points and 10 points. Okay. And you can see once it got past that resistance area, you can see the aggressive buying coming in here with these buying imbalances, 46, 156. Then it's going up in here, 69, 163. Now, bear in mind, these imbalances, these are actually delta imbalances. Okay, so there's still a buying imbalance, but you also have that buying imbalance still showing up in the delta. And it gets past it, right? That's what you like to see as you're going through resistance, right? You want to see that aggressive buying. And as you get past, to still see aggressive buying. It's one thing to have aggressive buying going into resistance. Yes, that's nice. But if you get past that resistance and you still see aggressive buying, it's telling you there's more to this move. Because, a lot of times, people thinking, oh, we're going up. They get excited, FOMO. The aggressive buyers are active. But once you get past that resistance and you still see aggressive buying, that's a sign that there's still more to this move to be had. And it pops right up past 66, all the way up to 68, up to 70. Okay. So, that's a way that you can use a delta footprint to sort of, find these areas of support and resistance by looking at the delta volume that's going through. And when I see a lot of bars sort of forming a base like this, and I just see that absorption coming in every time it sort of pokes down into this area, and it's just met with strong passive buying in the sense that there's resting liquidity in the market, and the market sort of popped back up. And if I can identify an initial target, then, I'm set, right? I don't know what the trade is going to be. So I hope you guys got something out of this video. Be sure to like and subscribe the channel. This is what keeps me wanting to make more and more videos is to teach you guys what to look for in the market. So thanks, everyone. I'll see you guys on the next video.